Hello everyone, Charles here, and in this presentation I'm going to cover the next portion of our trading sessions lessons. Today we're going to cover the New York session daily breakout strategy. As always, we must start with a disclaimer. Feel free to pause the video to read through the entire disclaimer, but when trading any financial asset, there's a possibility you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose through this manner of trading. Trading involves a real risk of loss, and past performance does not ensure future results. So let's get started. The New York session. The New York Forex session is the second largest to the London trading session in the currency market. This is a simple breakout trading strategy where you wait for the breakout of a support to go short or resistance to go long. Enjoy, and I hope this helps with your trading ventures. The best performing currency pairs for the New York session. Although the strategy can be used for all major USD currency pairs, the best results have been found on the Euro Dollar, GBP USD, USD CHF, and USD JPY. The rules to this strategy are to open a chart on the 15-minute time frame. Draw a vertical line at the 7 a.m. Eastern Standard Time on your charting platform. Draw a vertical line at the 9 a.m. Eastern Standard on your charting platform. Draw a horizontal line at the high of the identified zone, and draw a horizontal line at the low of the identified zone. So you've now created a box right in here, okay? Here's a little bit larger view for you, okay? Here was our high, and here is our low. As you can see, our high broke excuse me, 1, 2, 3. So about 45 minutes after, okay, the high broke the range and price continued up. Now if you trail stopped your trade, then you could have potentially gained 130 pips, okay? If you have just a set number, let's say you do a 1-to-1 ratio, that take profit would have been hit right around here. Okay, so there's different ways to trade this. I always recommend using a trail stop with any trades and on any time frame, but that is how that works. So what you would do is you place a buy stop pending order a few pips above that high. Okay, if you're not going to be at your computer, or if you're going to be at it, then go ahead and just manually trade it. Okay, and you'd place a sell stop pending order a few pips below the low. Okay, now some traders prefer to have the high and the low at the candle body, high and low. Okay, so this would actually be a little bit lower right here, and this would be right up to here. Okay, that's not how I personally trade it, but I do know some traders like that tighter entry, okay? So that is one thing to keep in mind, just a personal preference. You place your stop loss, okay, at the opposite end. So, for example, your stop loss for the buy stop pending order, okay, this would be your entry, and your stop loss would be here at the low, okay? And then for the sell, this would be your entry, or a few pips, okay, a few pips below, a few pips above, okay, but your stop loss for the short would be up here at this high line, okay. Order fulfillment, you wait for a breakout to happen, okay. Like I said, if you manually trade it, you can go ahead and just enter when that happens, or you can set those pending orders. If it fills, then great, and if not, you move on to the next day. Okay. Either way, once one order fills or once you enter manually in one direction, then you cancel the other order or you would not enter the other. So in this example, the high broke. If you had your pending orders, you would cancel the short entry, okay? If you're manually trading, you would just take that high and then you'd move on with your day, okay? Now, a general, if take profit or target zone for this trade is 50 to 60 pips, okay? Now, you're going to want to go back through the trading session lessons and look at each pair and look at its approximate pip movement, okay, in the New York session, because some pips or some currency pairs move more than others, okay? So you could be selling yourself short with 50 to 60 pips, and some do not move quite as much, okay? So I want to keep that in mind. Also keep in mind news. News is very important to watch out for during this time because there usually are multiple news releases. So be aware of the high and possibly even medium news releases, okay? So just something to keep in mind. But if you want to have a general starting place, okay, look at 50 to 60 pips, okay? Ranging market. If you see that the price does not break the high or low, then it is considered a ranging market. This is also considered a consolidation period, okay? At this point, you would cancel both pending orders and you'd move on to the next day. Trading is not a race, okay? If you don't get a trade in a day, it's not a big ordeal. If you lose a trade, it is not a big ordeal. As long as you stick to your trading rules, whatever your trading plan is for the month, whatever rules you have set place in that trading plan, stick to them. I cannot emphasize that enough. There's so many traders that get worried when they have a couple losses in a row or a trade went against them and they didn't have their stop loss in order. You know, things like that. Things happen, okay? Stick to your rules, stay positive, and move on to the next trade, okay? Trading's not a race. And as far as a ranging market is concerned, I would say if you don't have a breakout by the afternoon volume, so probably around 3 p.m. Eastern Standard, even 2 p.m. Eastern Standard Time, I would go ahead and just cancel those pending orders, okay? Some people wait just until the next day, and that's absolutely fine too, or at the end of the trading day, but there's usually not as much movement in the afternoon volume, and you don't want to get stuck in a trade. Advantages of this strategy. By having only a few assets traded, one time per day will assist in keeping your mindset positive and sticking to the rules of the strategy. With this strategy, traders can wake up in the morning, place a trade, and move on with your day. If you're not at a computer at that time, or at this time, that's okay. We do offer a Sominex Expert Advisor. You can set it up to run every day on the assets of your choosing and let it do the work for you. Keep in mind, it is technology, okay? Keep in mind, every broker has different spreads at different times, okay? So, manually trading is what I recommend over anything, okay? But the use of trading tools, strategies, indicators, alerts, systems, and expert advisors are still great to use, okay? And they help to give you confirmation. So when I am not going to be at a computer and I want to use an expert advisor, the Sominex is one of my favorites. It's been revised multiple times throughout the years and had different capabilities added to it. I like to use it for the entry, but I still like to manually trade from there. If I happen to be at a computer later on in the day, and I used it to enter the trade and it hasn't already hit a take profit or stop loss, then I will manually take care of the trade at that point for the rest of its duration and continue to manually trail stop. Okay, so that's just my personal preference though. More advantages. The Forex market trend that begins in UK generally tends to continue into the New York US trading session. Okay, so that's one thing to keep in mind. If the distance between the high and the low is less than 50 to 60 pips, the return could be very high. This is price action trading at its simplest form. All right, so check out our Pure Price Action series to learn basic and advanced setups. Some disadvantages of this strategy. All Forex trading strategies have their disadvantages. If the distance between the high and low is more than 50 to 60 pips, it might be a good idea to avoid it, okay? Because price has already moved and may not have the necessary momentum to be profitable, okay? Especially if you're only going for a 50 to 60 pip take profit, okay? If that range, let's say that range is 80 pips, okay, and that goes against you, you're looking at a much higher stop loss, okay, than your reward. So just another thing to keep in mind. I highly recommend going back on your charts and looking at the assets that you're going to add to your to your trading plan, and go back for a period of 6 months, go through every trade and look at how it would work out. Okay, so if you decide to take the trade under these circumstances, where there is a much larger distance, okay, it's better to aim for 20 to 30 pips profit, okay, instead of the 50 or more, okay, because price has already moved, okay. So here are a couple examples, okay, so the range is 59 pips here in your identified range, okay. It's best just to avoid it altogether. Move on to the next day or trade a different asset that day, okay. You don't want to get stuck in trades. Here's an example here, okay. Here's your identified range. Price broke above, 67 pip gain, okay. Right here, this candle, so here's your identified range. Price broke to the downside, but then there was a medium impact news release right here. So the short would not have reached its take profit. Then you would have been exited out to the full stop loss, okay? And if you had not, because this happened quite quickly, okay? If you had not been aware of the news release and you had not been at your computer to cancel the other pending order, you would have been entered into that, okay? Which in this scenario is fine. At least you would have profited quite well on the long, but it does not always happen like that. A lot of the time you'll have that news release and then price will end up coming back down and then you get stuck in two trades, okay? So again, personal preference, whatever works best for you. Just things to keep in mind. So here, this range is over 60 pips. This identified range right here, okay? So if you would have entered, it's best to avoid, okay, or set your take profit to 20 to 30 pips. But if you had entered this and you had gone for a 1-to-1, okay, you wouldn't have quite made it. You would have only had the potential to gain 40 pips, okay? So 40 pips is still 40 pips, which is great. But just keep in mind that whatever rules you set for yourself that month, you stick to them, okay? Don't chase trades. Here's the recap, okay? You identify the start and the end, okay? The 7 a.m. Eastern to the 9 a.m. Eastern. You set the high and the low. At that point, you set your pending orders, or you stay at the computer and you just watch and wait for a break to happen above the high or below the low. That's it. In my next presentations, I'll be covering daily trading session breakout strategies and how to properly trade them. If you're interested in learning more great strategies, receiving trading alerts, joining our academy, or checking out our free trading education, please go to slicktrade.net and we will see you there. You guys have a good one.